Hi traders, today we're talking about the best simple trust strategy for beginners or for people who work a 9 to 5 job who don't have time to stay on the chart all the time. So this strategy is very simple with precise rules and easy to follow, and it produces a good risk to reward ratio for you to make profit. So let's get into it. So the first rule for this strategy is that you trade in the direction of the trend. You trade with the trend. As a beginner trader, you don't trade against the trend till you gain enough mastery over your craft for you to make good decisions when it comes to counter trend trades. So the first thing we're looking to trade with the trend is that we are looking for market structure. When with market structure, we expect price to make higher highs and then higher low, higher high, and then higher low, then higher high. So with this pair that I have here, that is the NZD card, you can see that price is making higher high, higher low, higher high, higher low, higher high. So we can see that price is bullish. Price has a bullish market structure. And another way that we can um, know the direction of the trend is through trend lines. So as you can see, I'm using the trend line, and we can see the price is respecting the trend line, making higher highs and higher lows. So this is confirmation that price is actually bullish. And when you look at the date right here, we can see that since October 2023, price has been bullish, respecting the trend line, and then breaking market structure, that is making higher highs and then higher lows. So another thing that you're going to look out for, or another tool that you're going to look at, is the Fibonacci retracement. So I'm going to clear these drawings here. And with a Fibonacci retracement, you're looking at getting into trades at particular levels that will give us a good risk to reward ratio, or a level where there's a potential that price will reverse to continue the trend. So this is the fib tool right here. You select it, and then when you're using the fib tool, you because we are in a bullish momentum, and because we're in a bullish momentum trade, we're gonna put our fib at the previous higher low right here. This is the recent higher low, and we're gonna move the fib upwards to the new higher high that has been made, which is right up there. And we can see the Fibonacci levels. And when you're trading with the Fibonacci retracement tool, with this strategy, you are looking at entering the zones that is 78.80% retracement. So we want price to come down to this level on the Fib before we can look for setup, or we can look to buy. So right here, we are going to make our supply and demand zone. And with making our supply and demand zone, the first thing we need to see is that we need to see a rapid move by price from that level with big candles, or candles that has momentum. So here we can see this bearish candle here followed by a bullish engulfing candle, a big one right here. And we must see that the move from this zone went high and broke the previous higher high, which is right here. So we can see that the bullish move from here went high enough to make a new higher high and broke the previous higher high. So this is a good zone to use as a supply and demand zone for us to expect price to reverse and then continue the bullish move it has been making. So with drawing our zone, we're going to use the last bearish candle. We're going to use the last bearish candle. So I'm going to draw my zone here from the top of that candle to the low of that candle. So we have our demand zone right here. And with choosing our zones, we want a very fresh zone, a zone that has not been used before. So we don't want price to put a wick in this zone. You don't want a candle body in this zone. We want a fresh zone that is untouched. So the zone must be fresh. Good. So now we're on the daily time frame. So our stop loss is going to be quite huge. So we can reduce our stop loss by refining the zone. Then we can go to a lower time frame, that is the 4-hour time frame. And we use the same method which we use to draw the demand zone on the 8th floor. That is, we use the last bearish candle before the bullish move, and that is it right there. So at this point, I'm gonna put my buy order at the zone, and then I'm gonna put my stop loss below the next fib level. So when you're trading Fibonacci, because we are using the 78.80% zone, we want our stop loss to be at the 88% zone. That is the next fib level lower where we are making our entry, which is right at this level. So our stop loss is going to be right here. And then we'll be taking our profit at the high. But when we get to this level or halfway, you can break even, or you can break even when price gets to 1:2 or 1:3 raised to reward. That is depending on how you're able to hold a trade or how the market structure is unfolding on that trade. So that part you need to use your discretion. So as you can see, this is a very simple strategy with straightforward rules. So you're looking for your setup on the daily time frame, and it must be in line with the trend. And then you bring your flip, you're looking for a 78.8 retracement level, and then you look for your either supply or demand zone, and the zone must be fresh. So you either use your buy limit order or sell limit orders at the level, and then you put your stop loss at the fib level below where you're making your entry. So this is a very simple strategy. If you have any questions, any comments or contributions, just put it in the comment section, and I'm gonna get back to you. I hope you learned something. Thank you very much for watching. Have a profitable day.